So today's topic is about goal-based investing. Like, how is it going to help us? Goal-based investing, whether it is a short-term goal, long-term goal, whatever kind of goal it is, how mutual funds is going to help us. So let me know your questions or queries, any of the things. Like, let me know in the comment box. Let's discuss about it. I'm waiting on you guys, and let's see. Please drop your questions here so we can discuss about it. I will try to answer to best of my knowledge and within the regulatory frameworks. Yeah. So if I want to tell you basic about goal-based investing, is that normally what people do is that they just invest. They think, okay, I will start investing. They do not have a goal, or they are not able to find out what is their real goal is, why that money is required. So they start investing by themselves, and they do not have discipline at that point of time. Hi, Raghu, how are you? எப்படி இருக்கிறீங்க? நல்லா இருக்கிறீங்களா? So if you have any questions on this goal-based investing, please let me know in the comment box. I will try to talk about it, spill little information and some like basic strategies, what we can do on that. Yes, Raghu, hi. Are you still in Excite? See, in ETFs you do not get dividends. If you want to get dividends, then you will have to start investing in dividend-paying mutual funds, IDCW. Okay, so like in Pharma Bs and ETFs, no, you do not get it. If there is something like IDCW, you can go and invest in that. And if there is a if you do not get a structured dividends there, if they have surplus cash in their corpus, then they will decide on how much to distribute. Once they distribute, you will get the dividends. But dividends are highly taxable to you. Like, if you come under 30% tax bracket, you will have to pay 30% tax on the dividends what you get. It is treated as income. So any other questions you have? Yeah, thank you so much. So like, if you want to know more about goal-based investing or any other questions related to investments while building a portfolio, why we usually don't go with dividend mutual funds. Yes, dividend mutual funds, it depends on the client's requirement. If a client is seeking a consistent income to support his lifestyle or kind of income, then dividend stocks are good if they are not coming into tax brackets. Otherwise, it is better to go with SWP. The two key difference between is that the income what you get, from dividends is treated as income, and whether a person is coming under 20% bracket or 30% bracket, they are going to lose more. When we talk about SWPs are consistent withdrawals from our funds, right? So whatever funds we withdraw, they are treated as capital gains. Once that is like into short-term capital gain, we get 20% as taxes on the gains only. And long-term capital gains, we have 1.25 lakhs as exemption. That exemption will help us to navigate a little bit of taxes, and more than 1.25 lakhs per year, it is taxable at 12.5%. For those people who are coming at 20, 25 and 30%, it's always better to go with SWP rather than with the dividend-paying funds. Dividend-paying funds are only good for those who are not at all paying taxes. Gila, I have a long-term goal which is 10 to 15 years, so I am investing 100% equity. So when should I start moving my funds to safer options, non-equity? See, if your goal is just 2 or 3 years away, like let's say on 13th year or 8th year, then you can start dividing the whole corpus into 10 to maybe 6 to 12 parts or 10 to 15 parts, and every month you shift that each part into low risk funds. low risk funds in the sense liquid funds, arbitrage funds, or like FDs, like liquefiable FDs. You can start pushing it to like in a staggered form, not entirely at one go. Take your sweet time, take 1 year, 2 year as a buffer time, and keep something in equity. So you gradually move your funds to the lower risk funds, so that you can secure your complete corpus, what you have accumulated. Any market volatility, you can just navigate it very perfectly. Yes, thank you, Amit. Ajay Satyanathan, hi, hello, how are you? Do you have any questions on this? Geela, do you have any other questions on this? Like, did I answer you properly, or do you have more questions on that? Yeah. So one more thing about goal-based investment is that whenever you have a goal, you will be more focusing on that, and your personal finances will be structured. You know that, like, I will have to reach this goal by this time. Whatever investment, what I'm going to do might be enough, may not be enough, so that you structure your investments and you try to move as much as possible to the investments. That investment grows big, and that definitely help you to reach your goal much faster, and even you may have much bigger amount, so you can do it much more easily, and you may save something more for your like next goals. So keep your investment aligned with your goals, have a purpose. Do not invest just like I want some returns. That will deviate you from that way, like what you're doing. Yes, thank you, Gila. If you have more questions, please put it there in the comment box. So what are your goals? Like, if you have any goals, like for example, somebody called me 3 days ago. They told me that they have a plan to buy a car in 6 months, and they want to invest. So if it is only a 6-month gap, it does not make much difference in investing in mutual funds. It is better to go with the flexi FDs and something like that, because it is highly liquid. So Prabhu has a question. Hi, hello. Should we invest in ETFs or mutual funds for long term? Because mutual fund draws more expense ratio. Yes, see, this is not something very popular option, but I will tell you what happens in ETFs and mutual funds. There is something called INAV. Okay, INAV is the actual price for that ETF. If ETFs are near to that INAV or equal to that INAV, you can buy it. Or if it is to the discount of that INAV, you can buy it. But you never know whether it is in discount or is it in premium. So for that, if you start investing in ETF, and during a period of time when you accumulate more units, if you are paying 0.2%, 0.3% extra more than what it should be, then that is a loss to you. The expense ratio what you are going to pay in mutual funds is much more lesser than that premium you are paying. Okay, but in ETFs you cannot make SIPs, right? You will have to sit in front of your system, open your demat account, then you have to invest yourself. There comes the emotional problem. What happens is that you will see, okay, ETF is at 20 rupees, let's say. You will feel, okay, I will wait till 19.8, I will make that 20 paisa. And if it does not come that day, you will be frustrated and you may not invest. But in mutual funds, you do not have that issues, right? They invest in INAV price, and there will be a little extra. But whenever you see the difference between ETF and mutual funds, the returns are on par, or mutual funds are relatively little better than ETFs performance wise. Okay, so I prefer mutual funds. Most of my clients agree with this, and they also invest in mutual funds. ETFs are only good for those people who can time the market exactly when the market is down. They can accumulate it, right? At that time, those people who can understand it, they can do it. Okay. Do you suggest any tools to track the goals? Achievability by mapping MF portfolio to it. Yeah, see, what I do is to track our mutual goals. I have we have Excel sheet or Google sheet. We put everything into one place, saying that okay, this is my goal and this is what I'm investing XYZ amount to these funds. So we have everything there. So what we can, like, what it helps is that you put it everything by yourself. You know how, where you stand right now, and you can see the progress by yourself. So you can tweak your investments, whether to increase it or you have to balance it, or you can put something extra to some other goal. So use Excel sheet or Google sheet. Make columns like what are your goals, how much you are investing, what is the time horizon, how much have you invested, how much it has appreciated, what is the XIRR. Yeah, once in a month or once in a quarter you can do it. You will have a real track, and you will be very much attached to that particular goals, and you can do it. Yeah, there are some like tools, like applications. I can tell you the names. Okay, I have noted it down. Let me tell you that. Give me a moment. Kuvera application, where you can invest as well, and you can track your goal as well. Even my what I'm using, Kotak connectors, they also have it, but they are not that sophisticated, and you cannot tweak it. That is the main drawback in it. They are not customized, because this is very less popular option to track the goals. So Kuvera is one of the application. Goalwise is another application, but I personally prefer Google Sheets or Excel sheets. Bushra Zubair, how to check overlapping of portfolio and how much overlapping is okay to continue the investments. Overlapping, you have online tools. Just Google search that how to check overlapping in my mutual funds. You will get two options. Option like fund A, fund B, and then it will give you how much percentage of overlapping is existing there. But you have to always remember, when you look at overlapping, the data what they are using might be outdated. What data they are using, you do not know. Maybe the fund might have changed their portfolio right now, okay, maybe in a week or within 2 days, but that is not reflecting in their websites. That is one drawback. Second drawback is that overlapping is only like a concern when you do not know what money is going to that particular sector. Okay. And to your second question, what is the okay-ish kind of overlapping? 15 to 20% overlapping is fine, because most of the mutual funds have that much. Some go for 40% until 40%. If it is exceeding 40%, then it is not an ideal choice to go with. 20% is fine. Okay, 40% because of just some changes because of the fund manager strategy, then you do not have to change it. Okay, you can stick with that, no problem with that. Yeah, thank you Prabhu, thank you Geela. Bushraji, is it okay? You got the answer, I think. Online you can check it. Second thing is that you can do by yourself. If you get a fund sheet, every month you get a fund sheet in which they give the allocations and everything. You can work it out by yourself. If you have very few funds, you can do it by yourself. How to know our mutual fund is underperforming? What is the best time to exit? Motilal mid cap not even beating the last cap returns. See, I'm not talking about Motilal Oswal. I'm giving you a general thing with that. Switching funds is a big task. Okay, you are going to incur a lot of expenses on it, unless and until it is very much required and your advisor is suggesting you to change. Okay, if fund might have performed exceptionally well or better, or at least near to the benchmarks in last 2 to 3 years or 4 years or 5 years or at least 1 year, 1 or 2 years, there will be some hurdles to that particular fund, whatever fund it is, because every time when there is a very good cycle in a mutual fund, they change their strategies. When they change the strategies, they do not think about 1 month, 2 months or 1 year. They think it for 5 to 6 years or 3 to 5 years at least. To start that strategy work, they will take some time, and once they implement the strategy, it will take much more time to work. So 1 to 2 years or 3 years is the general time when the fund performance comes a little bit lower, and it kicks off its investments. I mean, it kicks off its performance to do well. Okay, so whenever you personally, when you are a do-it-yourself investor, if you want to think about underperforming, look at its rolling returns, okay, or at least last 5 years how much it has done, last 7 years how much it has done, and still it is not beating, like too much, like very underperforming from its peer group. Okay, not large cap, you have to compare with your peer. Like if you are comparing with mid cap, you have to compare with the mid cap funds only. So if it is largely behind with that funds, then you can think about changing it. It is better to give 2 to 2 years for any fund, like you invested consciously by yourself. So without that, you just do not jump on that. Large cap is doing well because large caps are very undervalued since last 3 to 4 months or 5 months, and they have performed well. Okay, mid caps and small caps were highly overvalued during last 6 months, which is why it was falling too much and it is not performing. But if you take returns to returns, they are almost 20-25% difference in the last 3 to 4 months now. Yeah, but that is what the market cycle is, which is why you need to have a proper allocation. Even if something is not doing well, something else will do well to you, right? So do not have to worry about it. You can give time to it. Okay, Prabhu, is that fine? You have any more questions on that? You can ask me that. So okay, thank you so much. Yeah, then so the drawback of not investing in goal-based investing is one thing I told, that we are not going to be consistent. We think that okay, this month I will spend something, next month I will do my investments. We will not having the consistency. We do not have that urgency or investment planning. So which is why when we attach our investments with goals, we want that goal to be realistic. We want to realize that dream or goal in our life. So we have a purpose to invest. We know like this is the time we are going to reach it, or much earlier. So goal-based investment is very much important. And like recently what happened with people, like they are gambling with their money. They do not know where to invest. Every now and then when there is a IPO frenzy, they try to invest in it. No problem investing in IPO, but they go beyond that and they start investing in listed market, which is much more dangerous, right? So Blitz YouTube, how to change our mutual fund distributor on our existing funds. Okay, if you want to change your mutual fund distributor on your existing fund, you can talk to your new distributor, new mutual fund advisor. Like he will advise you. There is one form called ARN change form. You will have to fill it up in the sense it is already filled up. You will have to sign it. Okay, how many holders? If you are a single holder, you have to sign it and give it to that particular AMC or that distributor, the advisor. He will pass it on, and once that is changed, it will take say some 6 months to transfer it. That is the SEBI rules, because mis-selling should not happen, or like backdoor things should not happen, which is why that rule has come. You can do this through ARN change form. Okay, that is easy. It is not a difficult thing, but you will have to, you as an investor, you will have no problem. Only the whatever investments you have existing portfolio, it will just shift, nothing else. So you can do like that. ARN changes the form. You can ask your new distributor to give it to you. He can give you. Anything else you have on this, like any doubts or any more question on this, how to change mutual fund distributor? Okay, fine. So any more questions from anyone, or shall I continue with this goal-based investments? Okay, so let's continue with that. So there was a question like how to track my progress towards the goal. Yeah, Excel sheet. Use the Excel sheet or the Google sheet. If you have an advisor, you can have shared it between two of them, between each other. Whenever you want to, you sit with them and talk with them. It's very easier to see the progress. Or if you have to, if you want to add new goals into that, you can easily explain it to your advisor, isn't it? You have things. You see, I have this XYZ goal and I'm almost reaching here. How can I start withdrawing it? How can I shift it? All these things you can put it together in an Excel sheet or a Google sheet, it is shared with both of you, you can make a strategy on that. Okay. And what happens if you do not invest consistently? Not a problem. Everybody has issues in investing, because everybody, there is no consistent income stream coming in, right? Somebody might have some emergency things to do, which is why you must have an emergency fund with you, right? Like you can stop your SIPs, but you can definitely change your investments as lump sums, staggered lump sums. Okay, there is one more question. Can we invest in stocks for long term, say 5 years, which are performing well from last 6 months, maybe overvalued now and it may go down in future? So what is the best time to invest in stocks? Best time investing stocks, direct stocks. First of all, I will give you a disclaimer. I'm not a person registered to give stock advice, but my personal experience and personal thought, I can tell you. Investing in stocks is not easy. Just with few metrics of P ratio, PB ratio, or enterprise value to EBITDA is not enough. You need to understand much more about it, because last 6 months, it is history. No stock is dependent on its historical performance. It is valued and taken forward from its next 2 to 3 years of performance. It is taken into global business consideration, how that particular sector is working, what is its future cash flow, what are the businesses it is going to take, how overall market is performing. You have to take a lot of consideration before investing in a stock. Okay, you can definitely invest in stock. There is nothing called you cannot invest in stocks, but you should know what business you are going to own and how it can benefit you going forward. If you understand that, then you are almost 60 to 70% done. Next 30% is that when to enter, when not to enter. That you can do with technical analysis combined with fundamental analysis. You can wait for 2 to 3 quarters of results, future results, not relying on the previous results. You go through financial statements, what they are saying about their business about next 2 to 3 years. If they are expecting more business from, let's say IT sector, okay, they will tell you that our plan is to have this much of billions of business in next 3 to 4 years. Understand it and see how much they have told in previous quarter results or annual results, and have they achieved it. Just by saying this much billion will not work out, have they tried to achieve it? Okay, then you can definitely invest in mutual funds. But you can outsource all this work to a fund manager, right? Like if you have a very clear thinking of this is the what return I am willing to take, then you can invest wisely in mutual funds and use your time for your own career growth. That is what my advice is. Okay, so there is one more question. In your WhatsApp channel, can you please indicate around 12 p.m. if it's possible to invest if the market have dipped? I mean, you are already doing it. How much has it gone down with it? See, 12 o'clock I can definitely do. No issues with that. But why I prefer 1:30, 2 o'clock is that it is the time, like 2 o'clock, after 1:30, it is the second half almost, okay, second session. That is where 2 o'clock there will be 1:30, 2 o'clock there will be bulk deals going on, so many things. There the market changes its little bit towards the end. So that gives us much more picture, so that I can give you clear picture that okay, this might happen. So accuracy is almost 70-75% on that. But if I give you at 12 o'clock, entire situation may change. Accuracy comes so much down. So it looks like you might lose on it. So I can definitely put 2 updates on it. I have no issues. Okay. And 12 o'clock, I will do one thing. What I will do is that if the market is too extreme and either to the right or the left, up or down, only then I will start putting one more update on 12 o'clock range, 12:30 range, so that if it helps you. Okay, there is one more question. I have one large cap, one small cap, one mid cap, one flexi cap. Am I well diversified? Yeah, looks diversified. Diversification is mainly dependent on your money. How much money is flowing to which sector is very important, and knowing your risk on that money flow is much more important. Diversification is great, fantastic, but if you want to create alpha, you will have to look at this little concentration on some sectors as well. So which is why focus on your asset allocation rather than like having multiple funds or multiple sector funds. Definitely you need all these sectors. I'm not saying you are not doing right, you are doing exactly right, but give more importance to your asset allocation as well. Okay, asset allocation in the sense I'm talking about within equity asset allocation. Okay, then you will be doing very good. Okay, so yes, Prabhu, I think I have told you a little bit about what I think about stocks. Okay, definitely you can go, but just do not only rely on your last 6 months of performance. It is not at all adequate. Last 6 months is nothing. Okay, you must take very meticulous approach or meticulous research behind that particular investment or stock investment, direct investment. Okay, because like Gensol was something what disrupted many of the investors. Many of people lost so much of money, right? There are much more other stocks where they are still excellent, but what happened is that during the market fall in the last 3 to 4 months, it fell much more than market. So there is chances of losing money than what you are going to gain. Okay, so have very thoughtful approach. If you are a beginner, start with small amounts, understand what the market is, how it is helping you, and try to read that financial statements, the future plannings, future business, how you yourself think market is going forward, whether it is EV, whether it is something like AI, whether it is technology, whether it is energy sector, whatever sector, how do you think it is going to be? Take consideration of trade wars, take consideration of global political issues. Okay, you can do that. No, do not apologize. Ask as many questions as possible. No issues. I am here to talk to you, all of you. Okay, please ask. No issues. Ask. Asset allocation means rebalance funds or funds going to my funds going to existing funds. How much it is going? Say for example, let's say you have 3. Okay, large cap, mid cap, and small cap. Okay, one of my recent caller told me that he has divided it equally. Okay, so what is the reason behind dividing it equally? Does it equalize your risk appetite? No, it is not like that. Okay, just dividing it equally does not mean that you are doing it right, but you need to understand, if I put, okay, let's say 1000 rupees in large cap, is it okay for me? Okay, is it going to give me the right returns what I am expecting? Will I be able to reach the goal there? Okay, second thing is that if I am investing in small caps, am I ready to take the risk of that small cap? If that small cap comes down by 25% or 50%, which is what happened recently during January, February month, am I ready to take that kind of hit in my portfolio? That is what you need to think. Then you will understand how much money to channel through mid caps, small caps, large caps, or micro caps, or some sectorial funds. You will understand. So you are aligning your investment as per your goal, right? So you know how to reach your goal. You will be knowing that this is what maximum I am going to invest. To reach this goal, I need this much of returns. So to match that returns, you know how much risk you need to take. So you are just channeling your money towards all these funds, right? You can do like that. Okay, Prabhu has one more question. How to know market is overvalued or not? Any specific range of PE will indicate that. So we could invest based on that. Yes, for that you need to start reading a lot of articles. Okay, compare the Nifty, Sensex, or World Index. Okay, where were they last 6 months ago? What was the PE ratio of the market? Even if you normally Google search, what is the PE ratio of Nifty 50? This is the basic thing I'm talking. Okay, if you just to do that, you will get it. It will say, okay, 21.6, 21.8, or 20, something like that. So it is overvalued. You can ask, okay, you can, when you go through multiple articles and something, okay, when I say articles, you should understand it is very, articles should be very, what I say, authentic. Okay, not normal articles written by some random people. Go with authenticity. then you will understand whether market is like overvalued or undervalued. Once it comes to near to the fairly valued, even if it is not fairly valued, but the numbers are near to that, you can start accumulating. And when it comes falling down, you can just have a kind of ladder kind of investments. You can start accumulating step by step. So you will have a very big amount invested within next for maybe 1 year, 1.5 years before it starts its new leg up to the as a bull market. You can do like that. Yes, I'm trying to come live more often. Okay, like I used to do Google Meets previous to this. I will try to come more often. Definitely, I will do at least once or twice in a month. We will see. So yeah, so I think most of the topics are covered. If you have any more questions, please ask me. Then let's have another session maybe in next 2 weeks, right? We can do that. Okay then, fine, take care, have a nice day. It's half an hour now, so we'll put another poll some after 1 week, because I'm a little busy on this mentorship program right now. After that, we will definitely do. Yeah, bye. Thank you, Amit ji. Take care. Have a nice day. Nice weekend as well. Bye. I'm signing off. Take care. Bye. Have a nice day. Bye. Take care.